Therefore, we have created something at SwissBorg that will come out in the next day or two that I think will be very, very useful and informative for yourselves. I'd like to give an overview of the macro picture, specifically looking at recession. Hello everyone, my name is Pietro, SwissBorg Analyst, and welcome to yet another market outlook, where this week we'll be looking at recessions, bear markets, and how to navigate a bear market situation. To start off this week, as I've been doing pretty much since I started the market outlooks, I'd like to give an overview of the macro picture, specifically looking at recession. We seem to either be headed for a recession in the medium to long-term horizon. Some experts already mentioned that we are at the start of a recession, especially in the US and in the Eurozones. Nonetheless, the indicators are quite unclear. The question that we really need to ask ourselves now is, are we guaranteed heading for a recession? Is that a certainty in the near future? And if so, what indicators are stating that? So the first indicator we looked at to see these kind of effects and these kind of correlations is the PMI index. So the PMI index is an index by Standard & Poor's, and it pretty much measures economic activity in the manufacturing sector. Now, the chart shows, and it shows the PMI in the Eurozone, that at every drop of the index clearly below the level of 50, of this PMI index, there has been a consequent recession. The depth of how low that index goes, meaning how low below 50, is not in line, so is not perfectly correlated with how severe the recession is, because otherwise 2008 would be a lot more drastic. But it seems to, in the past, have predicted recessions or clear drops in the market. The same with 2020, as you can see in the chart. The same with the dot-com bubble in 2001, 2002. The second indicator that we looked at is a chart that is presented by the Federal Bureau of Statistics in the US, and it's showing the probability of a recession based on the yield curve. Now, from what we can see in the shaded gray areas on that chart are showing the recessions, it's showing that it's clearly possible to pretty much predict or get a clear indication of an upcoming recession based on its interaction with the yield curve. Now you see there the recessions of recessions or drops in markets of the 2020 following COVID, 2008 due to the global recession, pretty much due to the housing market in the US, and then other factors. Dot-com bubble, the drop in the 1980s, all of those have clearly pretty much been predicted by this indicator. And at the moment, we are a level of 29, so 29% probability of a recession in the near future, and this level seems to be on the rise. So it's definitely something that we need to watch out for in the near to long-term future. It's not guaranteed; nothing is guaranteed in markets, but it's something that we need to be aware of. So in times of uncertainty, since also indicators are pointing to the possibility of a recession in the near to long-term future, it's important that we address fears of investing and that we address crashes overall. So it's very important to remember how economic cycles work and how eventually markets grow, as well as the crypto market, because that will obviously, it's still at a young stage, relatively speaking, but it will follow similar trends that other markets have. So when we look at any economic cycle, there are 4 clear stages, and those stages are a peak. So that we're at the top of a market. There's a lot of hype. We're at the top of the market, and the market peaks pretty much. It reached the top level. Then eventually there is a drop. So that drop causes a recession where there's a severe drop and eventually reaches a bottom, so a trough. Once it reaches that bottom, then there will be an eventual recovery. And after that recovery, a peak again. And this is the circular cycle of what we call an economic cycle. And that is also shown in the circular motion in the chart on the right. It's important to note that in this cycle, generally speaking, and history has proven this right, it's that the trend is growing. So it means that every time there is a bottom, that we get to the bottom of a recession, that bottom will be higher and higher than the last bottom. The same with every peak will be higher and higher. So although the economic cycle always ends back in a recession and in a recovery period, it means that the trend is diagonally upward. So it means that with every recession, the next peak should and will be higher, and every next recession, that bottom will also be higher than the previous recession, meaning that although we might now be heading into a recession, or we are in a bear market, there will be eventually a recovery that will end up being higher than the previous highs, and that should always lead to that. It's unclear what the time horizon for that is, but every economic cycle has proven that in our past so far. So it's unfortunate that at the moment, given this bear market situation, a lot of people might be scared to invest. And obviously a crash just happened. A lot of people might lose money, and it might be a little scary, or you might be a little risk averse to re-enter the market at the moment. But therefore, it is important to fight back this recession, and not necessarily fight back, but know how to navigate it, and know how to properly, let's say, position yourself from an investment standpoint to then optimally make the best opportunity of the next recovery and the next peak. Therefore, we have created something at SwissBorg that will come out in the next day or two that I think will be very, very useful and informative for yourselves. I'm proud to present to you SwissBorg's bear market report. The aim of this report is really to help you navigate this bear market, to help you navigate a potential recession or a potential further downward trend of markets before we get into some sort of recovery and the next bull run. So we really try to focus on what could our users need, what might you need in your investment journey, and how can you more easily navigate and position yourself in a bear market. Therefore, there are 4 clear chapters in this bear market report. The first will look at the crypto market. So we'll look a little bit at the macro picture. We'll discuss Bitcoin and Bitcoin's price movements. And then we'll also discuss Ethereum and our bullish case on Ethereum due to the news of the upcoming merge that will happen very soon. The second chapter will look at the SB app tokens, meaning all of the tokens that we have in our app. We gave our analysis, and we did a little bit of explanation on maybe how to position yourself or how we cluster those tokens into specific categories based on certain attributes. So that will talk a little bit of clustering of the tokens in our app. The third chapter will look at the state of stablecoins, and this one is extremely relevant given what happened, of course, this year to the Terra ecosystem and to UST. We'll give an overview of all the stablecoins in the market, or at least the most important ones. We'll discuss depegging a little bit, which is exactly what happened to UST and some other stablecoins this year. And therefore, we'll also discuss the stability of stablecoins, meaning, of course, stablecoins should ideally be perfectly stable based on the term itself. But that has not been the case, and so we'll discuss these aspects a little bit as well. Finally, and I think most importantly for all of our users, we'll look at some lessons from the past and how to overcome a bear market. Therefore, we'll touch a little bit on market crashes, what happens when a market crashes, and what happens subsequent to a market crash. We'll look a little bit at lessons from the past and correlations between the stock and the crypto market currently. And finally, we'll give you some very useful and practical information on how to navigate the bear market. Therefore, what you should essentially do, how to position yourself, how to best take advantage of this downward turn, because with every recession or with every market crash comes a lot of opportunity. And there's a lot of very practical and useful information to help you guide your investment journey during this bear market. So thank you very much for listening this week. I hope you get a chance to read the report, and I wish you all the best.